A little over $1,000 profit today, shorting the S&P using simple auction market theory concepts and supply and demand. To put it together, I'll show you guys how I came up with this analysis. But before I get into it, I'm going to post a link to my Discord in the description. It's completely free, and I post my pre-market game plans, levels I'm watching out for, and everything else in between. So without further ado, I'm just going to start with the pre-market plan. So there's a few stuff to take out of today that I think everyone could learn from. First of all, the sellers are in control, right? That's the first thing. Let's just read my pre-market game plan. Yesterday, the S&P and NASDAQ had its largest decline since 2022, with ES falling over 2% respectively and liquidating a bunch of longs in the market. We are now retesting a key inflection point in the market, and I do not want to be bearish above this, but I said if it could break and the equities are weak, this can support a potential sell-off in the market, and we could see further selling. And I said to the upside, the only level I have is the 9.6 supply, which was an area of supply that I got from the tape. So, main concept here, look, to the downside, I was watching the 5.450s, and I said if the selling is heavy and the S&P gets back under this level, we could gravitate towards my next level at this 5.437/5.435. So to show you guys first a visual that this is one thing everyone could learn from this is when we have a rollover and the market rolls over and gaps up, rollover gaps tend to get filled. So if you look at this chart here, this isn't a normal candlestick chart, but it shows like similar information, right? So you could see clearly here that there is a gap from the market rollover. So if you go to like any charting platform, you'll see the gap unless you back adjust your charts, which I don't personally use. But let's go into trading view. You'll see the huge gap. Right, I back adjust my charts only on the higher time frame visual, but if you look at this, you'll see that there's a large gap. So the rollover gap was here. This is usually something that tends to get filled. So you guys can mark this as like a level here, and I use the close. So you could use like a 690-minute time frame, whatever time frame you want. Just mark the close of that day, and you see how it acted as support. It's very important because the gap, it acted as support. I could go back to several times in the past where this happens. Look, this was another rollover gap, right? You mark the rollover gap. I mean, it doesn't get filled immediately, but eventually the market wants to come down and retest it. Could do this all day. We never filled this rollover gap, but you guys get the point, right? You can see this rollover gap was right here. Market eventually sold off. So that was an area that the market tends to gravitate towards. So that was the first part of my thesis there, was that rollover gap. But back to my pre-market plan, I'll show you how I got my 5.450 level. So now we have the rollover gap, and then we have a 5.450 level. Where I got this was this 5.450 was the FOMC high right here on June 12th of 2024, which we never tested. Another thing that's very important that I would mark down, highs or lows from FOMC tend to be important areas of inflection. This is just what I learned from my mentor. So this is a FOMC high, and it usually gets respected really well, especially because it hasn't gotten tested. Okay, so there's FOMC high. And the final piece of the puzzle here is you could see this was a balance period, right? The market was in balance, and then we moved up out of it. So if we get back under a balance high and there's weakness, usually the market gravitates towards the midpoint of a balance range, and then usually towards the low. And the midpoint was aligning perfectly with this roll gap here. You could see. So my thesis was, okay, if we get back under this 5.4, we could fill these 3.5s. And this is just auction market theory. It's simple auction market theory. You could see these are 5 auction market theory rules. I'll put the link to this in the description too. But this basically shows what I was talking about. So you see 4 right here, or let's just go over 1. So if price accepts into the balance area, aka accepts back under 5.4.5, it's likely to revert to the other side, aka like 16 to 5400s, right? Technically the other side. Price often retests the edge of the balance area before traveling to the opposite side. But this happened today, which is if price reacts strongly from the point of control, you could use a point of control. You could use like the midpoint, but if it reacts strongly from the point of control right here, it can disrupt rule number 1, which is what we saw. We came back into it, we filled the gap, and look, you can't make it up, and we came back above. So that was most of the context Also, I liked how the VIX was strong. VIX ended this lower high pattern showing strength, right? Apple was lining perfectly with ES. We had this area of confluence. So if we got back under, it's the same thing. Look at this, and then look at the right here. Price acceptance, the balance area is likely to revert to the other side. Apple is one of the top weighted equities in the S&P. So if we got back under that, that's obviously not good for the S&P. So I use that analysis as well. It's the same exact thing, right? Balance, you get back under it, it should gravitate towards that low. So there's a bunch of confirmations here. Even with the NASDAQ, I mean, you could see how much confirmation I had. NASDAQ, same exact thing. You see this balance area? It's literally the same exact thing. If price accepts into it, it's likely to revert to the other side. This is a sign of weakness in any market auction. So there's tons of confirmations here. So I'm like, okay, I'm liking that. And then moving forward into intraday commentary, I'm going to go to my buddy's um, Discord here because I was analyzing the market in real time in this Discord by accident. So this is what I normally post in mine, but I said here, um, I don't believe a high day is in right at the open unless a massive sell-off is coming. If we don't reclaim above 7.3, I said there's a 952 in the near term, and then we break under 5.450, this can validate a larger sell-off. So why I said that was because I was reading the tape, and this sounds weird, but you watch the tape enough, like it kind of speaks to you. So like what I saw here is I saw a lot of trap participants or a lot of absorption at these highs. That's why I said I don't believe a high day was in, because like if you look at this, market opened up and then we started to consolidate, right? So if you're watching the tape, you would know what I'm talking about. At this 5472, 5573, there was tons of trades removing liquidity from the market, hitting the offer, and there was tons of volume being transacted at the highs. And usually the best highs or lows is where there's a lack of activity or just areas where the market doesn't spend a lot of time. But if the market spends a lot of time, a lot of trades are being facilitated at a price, it's usually not the best high, if you know what I'm trying to say. So an unfair price is where the market doesn't spend a lot of time. A fair price is where the market hangs out and spends a lot of time. So that's why I thought this high day could get revisited, which eventually happened. But I'll show you what the tape looked like because I think my buddy had it here. You can see this blue shows buying, and then this was happening at the open. So you see all this volume at the high. So I did not think a high day was in, honestly, at this point, unless a very large sell-off was coming. Because like usually we will end up taking that high, but if we don't, it's a sign of weakness in the market auction. So we ended up moving lower, and then you'll see the market starts to move down. So right here, zooming back up, I said buyers don't want to give out this low. Literally just reading the tape and putting myself in the position of other participants is like my main edge. So I thought it was mine, and then let's get into mine. Intraday commentary. Market ends up selling off, right? And I see Apple getting back under that. I said Apple and Amazon showing weakness. Apple is room. Again, failure to reclaim above 7.3 in the near term is a sign of weakness in the auction, and a large sell-off can come validated under 5.450, which was the level I showed you. You could see super large selling volume. Market breaks under 5.450. Now, when the market's trading or trending downwards and I'm trying to play short, I don't love entering on a breakout, especially because this 5.450 was at the pre-market low. So I did not trade this breakdown. I mean, some people trade breakouts and breakdowns. That's cool for them, but I personally don't like to take an entry like this on the first breakdown. Yes, there was nice volume backing behind it. Yes, it looked weak, but my risk would have had to been above the 60s, and I'm shorting a pre-market low break. I prefer not to do that. But as the market began to move down, I saw some footprints of sellers. And what I like to do on downtrending days, I like to sell the rallies up if I could join these sellers. So what I mean by that, as you can see, market selling off. I saw large aggressive selling hitting the bid at this 5448, 75 to around this 53. So if I could pull up a footprint, it would be easier to visualize. So I'll load that up to take a screenshot of that, but it was mainly from the footprint. You could see it here too with these red bubbles, but I'm using multiple tools. So yeah, on the tape, I saw a lot of selling hitting the bid. So my thesis was, okay, I want to play short. I can't chase this. I want to sell a pop, but I need an area with good risk to reward. So if we could pop up, get a nice strong push up into that area right here, and then sellers could step in, that's where I would want to play short. Right, that's where I'd want to play short. targeting that 3-5 level that I showed from earlier. So I said right here in real time, right here, I'm watching for a move up into this 4-8, 2-5, 4-4 when offers can appear to play short, targeting 3-7, 3-5. So I'll mark this out right here, right? 4-4. 4-8 point. This was before it happened, by the way. At 10:03, I said 4-8.25. So I'll just mark it to see what it looked like. That was a level I got from the tape intraday, where I was looking for a retest into it, right? Market selling off. It looked like this. This is where I spotted the large selling. I said, okay, if we come back up into this and sellers could step in, I want to play short. We sell off, market consolidates, and then right here, market retested this level of sellers right here intraday from the tape, and I just joined the sellers, took it short. Look, this is before, this is after right here. Boom, trying it short here at 10:06. Market looked like this, right? 10:06. Saw the rejection. This was enough confirmation for me to put on risk to the short side, and then from there, this trade was insane. This trade worked out in my favor pretty much immediately after I entered. And let me just show you guys the footprint. Let me show you guys the other stuff. So you can see that's where I got the entry, right, on the reject here. Trying some here, right there. Okay, these are the metrics for the trade. You can see I got in there where I said, right, I got filled at 10:05. Just to confirm that this is not fake. At 10:06 a.m. I said I'm trying some here, right here. And see, my stop was above this high. I was risking about 2.75 points on this because I was filled at 47.25. My stop was at 50, so I was risking 2.75. And I made 10.75. Right, so I was risking $275 to make to make almost 1.1K. And this trade worked out in my favor immediately. Look, I entered at 10:05. Super good entry. I was out in this trade within 7 minutes. $1,000 profit. You can't ask much more than that. That's everyone's dream, is to make $500, $1,000 profit in that short amount of time intraday. When you use auction market theory, supply and demand, read the tape, remove the indicators, you can come up with really nice scenarios like this too. And look, I took it short here. The market ended up coming back and bouncing right at my 3-5 level where I covered. Alright, I said here, large buyer 4-3, under him can put pressure, boom, sold half at 3-7, holding the rest, looking for 3-5s. I'm out here all out, slapped those shorts, smacked. So that was a quick trading breakdown. Just using auction market theory, supply and demand, order flow concepts, market profile to come up with these levels. So quick recap.